Hello traders, and welcome to another video review. Today is Tuesday, September 13th, 2022. It's very interesting day on the Forex market. So let's find out what is going on according to the Forex calendar. What do we have here? Data from the United Kingdom. Some of them were already published. We have an average earning index and the bonus increase 5.5%. Forecast was 5.4%, better than the previous reading of 5.1%. Earnings in Britain goes up. Climate cow change is 6.3 thousand, so it's way better than expected, minus 15,000. So it was expected a deterioration, but what we have an advance to 6.3 thousand. So we will definitely have to check the British pairs. Bank of England Governor Bailey gave a speech at 10 a.m. So what else do we have here? We have a German ZEW economic sentiment data. Please remember, this is the most important sentiment indicator from Germany, and if we are talking about Germany, we are talking about the whole European Union. Minus 53.3 points. Last reading forecast is minus 60, so deterioration. So 11 o'clock we will see what is that German economic sentiment, and the other two ZEW sentiment index sub-indices. And 2:30 we are waiting for the scheduled event of core CPI data release. The core CPI is expected to stay at the same level of 0.3% in the US. So interesting, very interesting day. Everyone will find something for himself, but first let's find out now what is going on with the pound, and we are start with the cable chart. We got the cable chart here. There you go. 4-hour cable chart is showing us that we are still in the short term in control of bulls. Why? Because we very nicely bounced from this bullish divergence between the price and the RSI indicator on a 4-hour chart. Very nice bounce, very strong momentum, breakout above the trend line, breakout above the first technical resistance. Now we are testing the second technical resistance. 117.17 is the level. Local high was made already at 1.1731, so we should expect another advance towards 1.1760. This is the next level. So let me just put my blue arrow here, and everyone can see that with that strong momentum, with that positive momentum and positive sentiment, especially after the data from the UK, we might achieve a little bit more today. There's still room to grow on the RSI. There's still room to grow on the chart. For our chart, 1.1760 is the next target for bulls on the British pound to the American dollar. So very nice data, very nice market reaction. What else do we have in our arsenal? Let's find out what is doing the US dollar to the Japanese yen. For our chart of the US dollar to the Japanese yen, let me switch to the daily so we can see our nice Elliott wave count here towards the, of course, level of 145. This is the top. Now the question of course remains, if this is the top for the wave 3, it looks like the top for the wave 3, so now we should have a correction in wave 4, and this is what the market is doing. Let me just find out whether we have more targets here. I think 261 would have been hit. Where's 261? 277. There's a 2. There you go, 261. Of course, that was the target. So very strong wave 3 to the upside. 145.40 was the exact level of 261% extension. We hit 145, only 40 pips miss. But if we get this a little bit right, we can see that this level has been hit, and that was the target. Anyway, doesn't no questions here. So this level now will act as a swing high. Of course, that means it will be a technical resistance for the price. So red line goes to 145. 145. Let me just put my levels. Right there you go. What should happen next? Wait for correction. It can be any correction now. It can be triangle. It can be simple correction. But if we follow the alternate rule of the Elliott wave theory, this is very simple correction in the wave 2, right? This is like a zigzag or something. So that might be alternate, so that might be complex. What does it mean? It might be complex. It means the current price action on the wave 4 in the US dollar to Japanese yen might be in form of triangle, double zigzag, triple zigzag, double free, triple free. So we might spend some time here. We might spend some time between 145 and the lows. The current lows is 141.52. So this is a rather very big range for the of course for the movement, for the overall movement, right? The wave 2 correction on the US dollar to Japanese yen was, let me just take a look here, 2.95, roughly 3%. Currently US dollar to Japanese yen price range is around 2.46, so we still could get a little bit lower, okay, if this corrections supposed to be equal, of course. However, as long as we trade above wave 1 high, wave 1 high is 135.50, so far away from the current level of 142.25. As long as we trade above this level, the correction in wave 4 might be any possible corrective pattern, especially if it's complex one. So please be prepared, be patient, because we are starting the corrective cycle. When the wave 4 is done, a rally in wave 5 is expected. So that's the current plan for the US dollar to the Japanese yen. I think we should take a look at the US dollar to the Swiss franc, because we didn't see this one for quite some time. So what do we have here? Well, if we just take a look at this situation here, we can say that nothing is happening. You know, we just going up and down to from one price extreme to the other price extreme, and this is exactly what this market is doing. As you can see, those are the zones, right? Supply zones on the daily time frame chart of the US dollar to the Swiss franc. However, if we just zoom out a little bit, you can see that we got this massive advance here, very impulsive, very strong. So that might be just a correction ahead of the next advance, next rally. So we got this interesting bounce from the level of 9,371. If we just take a look at this situation here, right? Very nice bounce. However, no new high was done, and it looks like the market likes to do this kind of a swing from time to time. So if we just consider the fact that we almost retraced the whole of this move, right now it's 9,513, there is roughly about 150 pip away towards the technical support on the level of 9,373. So that's the support. This is going green, right? Momentum is already negative. Momentum is below the level of 36 points. So bears are in charge of this market in the short term. All right, and we are below, of course, the 130-day moving average. So let me change this to 100 to see what is going on here. And as you can see, well, the 100 doesn't actually shows any advantage for us right now. So let's just stay with the monthly average. We are trading below the 30-day moving average, and the next target for the bears is 9,373 on the US dollar to the Swiss franc. This is definitely, that price action here is definitely not a part of this up trend. Okay, so this is something else. This is either a correction, or there is a some sort of the distribution of the US dollar before the market will drop lower. Okay, so two possibilities. If we break below 9,373 in the midterm, so that from 1 month to that from 2 weeks to 3 months, if we will break below this level, then of course we are back inside this massive consolidation period. It took like 6 months to get out of this consolidation, and it looks like the whole of this this price action was just a part of the distribution scenario for the US dollar to the Swiss franc. So that's the situation on the US dollar to the Swiss franc. Let's find out what is crude oil doing today on the daily time frame chart. Very interesting price action here. Just take a look at this. We got bearish engulfing, we are going lower, we got new swing low. If we extend our line, well, it's like it's like sitting on this line. Okay, so this one was violated and it's no longer applicable, so we need to we need to place another trend line here. However, as you can see, this is no longer a wedge, because that would be some sort of a wedge if we consider this recent price action as a wedge. So it's definitely not a wedge, right? So we got a bounce from 81.96, so we got to the level I pointed out before, right? So that's a very nice price action here, and we are still trying to break above this 93.73, 98.35 supply zone. So that's another attempt to rally. If we zoom in, we can see clearly that the market is approaching the 30-day moving average. Maybe it will give him a little bit of a pause that might cap the rally, especially because we are still below the level of 50 on the RSI. So this is still the market that is in control by bears. Please notice the fact that it takes like 2 days to smash the prices from 88 to 82 and 4 days to get it back, right, to reverse the price. So definitely bears are much more stronger than bulls right now, at least in the short term, and it's starting to look like a new downtrend for the market, right? So because it's not a wedge anymore, so that might be something else going on. The next best scenario is that the biggest prices for the crude oil was done already early at the beginning of the March. Then of course the replay was at the beginning of the June, and since then we are in a free fall. It's not that dynamic, it's not that aggressive. However, market keeps doing lower lows and lower highs, definition of the downtrend. That's everything from me for now. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.